Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So I wanted to show you these because we had, again, very recent setups here that just took place, and we had also a little bit of variation in each of those so that you could see what some of them look like that might not be as textbook as the previous ones that I showed you, but they are still the same strategy. We're still seeing the momentum shift. We're still seeing those three highs, and we're still seeing the three lows. But we have a little bit of a difference in terms of exactly how they form. And here's the setup here with the channel break. And this is that three legs of downside that I showed you on that earlier slide when we were looking at trend development. So you can see that you had trend exhaustion heading into this third low, which places this trend as being exhausted within this larger trend exhaustion. So we really have a lot of them coming together. There's even trend exhaustion over here too. And they're really all working together to help reverse this off of this low on the 17th. And there was a little bit of a continuation type of move with a little bit of congestion right in here where we had a breakout that led to this previous high. And the reason that previous high led to a congestion is because we have a little bit more of a V type of bottom that formed. So that meant that that previous high is going to be a strong initial resistance zone as this rallies and comes back in here. And then we had a two-wave correction, which is another very popular strategy that continued this into this week. So, this is really one of my favorite type of strategies that I like to trade. Obviously, there's a lot of variations of this strategy, but I wanted to show you the core components of it so that you could really get a feel for how you can use these building blocks to improve your trading and give you a strategy that really works extremely well in these ETFs. For those of you that want to learn more about the types of strategies that I use and how to put these 5 building blocks into place within these strategies, whether you're trading a bull flag, a head and shoulders pattern, any of these type of strategies. One of the courses, my most recent course, is a market timing guide. And basically, I go through all of my favorite strategies, and I show you how the 5 building blocks impact the success or failure of those strategies, what the entry triggers are, what the stop prices are, even what to look for as targets on them. And then I go in and show you some examples of the trades using actual trades that will show you, here's the pros on the setup and here's the cons that were on the setup. Because let's face it, most of the setups we trade aren't going to be 100% perfect. So I wanted to show you not just, here's the textbook, this is what you do. I wanted to show you, well, what are the pros and cons on particular setups so that you can see how they impacted the success of each of those trades. So that's my most recent course, and we had a special running that is just made possible through the ISE, so it gives you a really good discount over what you would find if you just went to my website. And so you can find out information on that course as well as a special offer that I'm offering for the other ones for those of you that attend these ISE presentations. And that's just at tonihansen.com/special.html. So I would hope that you love this session and have learned enough very basic concepts that you'd like to pursue this further. So if you're interested, go ahead and take a look at that. And I want to thank you guys for coming today. There's a lot of resources that the ISE offers in addition to, their typical webinars that they have. And here are some of the links that you can go to kind of check those out. So thank you again for everyone that was coming. If you have any additional questions for me, you can contact me by going to tonihansen.com and clicking on the contact link. I'm going to take a couple of questions now. So if you have any questions, go ahead and post them in the chat box or in that Q&A box. We have a couple of minutes left here, so I'm happy to address any questions that you might have. Mark asked a really good question. He wanted to know, with volume confirmation, how can one trust the trend enough to ID it as a breakout to the upside or the downside without volume confirmation, rather? That's a really good question, because when you're looking at volume, when it comes to using these breakout type of strategies, let's say we've got this trading range that's formed here. One of the things that people often talk about is that in order to give you more trust that you're really taking a successful breakout, you want to see volume coming in when the breakout occurs. But honestly, if you're really getting into a position and starting to position yourself for a breakout, you don't have that volume confirmation right away. That confirmation comes probably up in here, which is not the most ideal place to get into a position. So I'm not looking so much as volume confirmation as in what are we seeing once the breakout's taking place. I'm looking for volume to confirm, so to speak, within this trading channel itself. And what you want to see is that after that initial push to the upside, you either want volume to remain steady, where you don't see any increases in volume, or you want to see it drop as that trading channel forms. Obviously, a drop is going to be the strongest indicator that you have a successful breakout strategy coming. And particularly, if the volume drops within that last portion of that period of congestion prior to the breakout. So oftentimes when I'm getting into a breakout strategy, and this is not something I would recommend to newer traders, but I will get in before the breakout even confirms a channel break by dropping down to the very smaller time frames and looking to see how light the volume's gotten. If there's a really sharp decrease in volume where the momentum has also slowed dramatically, then I'll get into it on that light volume move. I'll use the support levels. I'll use the trend placement. Even how long that period of congestion lasted is very important for a breakout. And I will use those keys to position myself and take the trade before we even have that breakout. Because once this breakout occurs, that's where you're going to see the volume start to increase, and you'll see people basically jumping all over each other to try to get into the trade. And that's really not the best place to go into a breakout. So I'll use these shifts in momentum within that congestion itself to help time my trade. You can even do it where, let's say you've got a breakout where here would be the channel break, but this last pullback is more gradual. It might not be hugging that upper channel, but it's more gradual than this rally here, and the volume is dropping. So when this channel breaks here, I'll use that as my entry trigger. And so my entry would be right here. And of course, what you'll see is that here's where everybody else is trying to get into it, when that upper channel breaks. And oftentimes they'll have it, and it'll push up, and then it'll fall into congestion and often pull back into what would be a break-even zone. And so many people have their stops at break-even, it's ridiculous, that they'll end up getting flushed out just to see it go up again. And here you are down here perfectly happy because your stop's down here. And so you're not really worried at all when this pops and then pulls back into this congestion before it tries to go again. So that's just one of the ways that you can really look at volume within these breakouts to kind of give you a stronger confirmation, even though you don't have the confirmation per se in terms of the volume increasing as you get the position, but you'll have it increasing afterwards to confirm it. And if it doesn't increase, that's where you can run into situation where you kind of know that you have a higher risk position on your hands. So let's say we got this breakout that's formed and it's broken higher. But even as this goes higher, volume is still not picking up. And oftentimes the momentum will also shift. So you might start to see a stronger move to the downside like that. And that's going to tell you, you know what, you're more likely to see these stops end up getting hit, and maybe you need to adjust your strategy and just be a little bit more aggressive. You can always try to get back into it again if you see a stronger setup. So that's, one of the things that you can look for as well. Here's a question I get all the time, and this one is from Rick here. And he wants to know, what are reasonable expectations for win or loss ratios on trades? And this is something where you're looking at specific individuals and what their comfort levels are. Because with these 5 building blocks, you can really adjust the strategies to suit what your risk parameters are. For example, me, I'm incredibly risk adverse. I don't like to take a position unless I know, and I mean know by as in I've proven, that the strategy is going to be 80% effective for giving me at least twice what I risked. And this is something that seems like a ridiculous amount to a lot of people. But you can put these 5 building blocks together in such a way that that is very, very possible. The downside is you're not as active. You're not going to be taking as many trades because you'll be taking fewer cons on the positions. Like I said, though, the trend placement and the momentum, those are the strongest things to look for. So if those are in your favor, you've already put things over 50-50. So it's really good to look for those. So, but everybody's going to be different in terms of, your wins or losses on these types of strategies. But these are incredibly strong strategies, even if you were looking at adding additional cons in terms of volume or in terms of the time of the day that is taking. They're still very, very strong. This momentum reversal strategy is really the strongest of all of the strategies that I have because it hits that 2-to-1 when you're coming off of a third high. So if you're taking it off of that third high here, if you're able to get this entry from that channel break, you can get at least 2-to-1 on it about 80 to 90% of the time, even when it ends up failing. Because by failing, it'll pull down into here, the lower channel, and then it might do a longer base and end up pulling back up again. But by that point, you've already covered your stop because it's such a tight stop. The thing is, though, even at 2-to-1, I'm usually not going to take those gains because on this momentum reversal strategy, I'm going to be looking for more if I'm getting it in on the third high. If I take that channel break, then you might have more a lower chance of success at 2-to-1 because there's going to be more instances of where it breaks that channel, and then you might see that shift in momentum, and then it pushes back through that third high. So it's really depending on where you're entering the strategy as well. So those things are going to impact the trade and the success on the trade. And really, anybody that's telling you, oh, a head and shoulders pattern has like 66% accuracy, that's just ridiculous because there's so many variables that can go into head and shoulders. And how do you define a head and shoulders? What are the key components that you're looking at? Those are the things that are going to impact its success over time. You can't just randomly say this is a head and shoulders, it's 60% effective. And people that are trying to tell you that are ridiculous, and it doesn't take much to prove them wrong. So I can show you, the statistics on the trades I've taken. I did a chat room for many, many years, and actually on the futures trades that I gave, there were many days where I was 90% accurate, actually for several weeks in a row that I would be 90% or plus accurate for more than 2-to-1 on a trade. And that's because I really stuck to those high probability strategies. And people would say, well, that's just ridiculous. And so, I had to show them live that no, it's not ridiculous. You can actually do that. But yeah, you're going to end up with only a couple of trades a day as opposed to like 20 or 30. So you might only have a couple of trades a day, have really strong trades, but you can make less than the traders that are taking more risky positions because they might be perfectly happy with being accurate 60% of the time and getting 1-to-1 or 1.5-to-1. But they're so active that those gains add up more than the people that are looking for the really high accuracy trades. And that's what you have to keep in mind is, what really suits your personality, because everybody is going to be a little bit different. And frankly, most people are they're more comfortable with higher levels of risk than what I prefer to take myself.
All right. Well, it looks like we're out of time for this afternoon, unless there are any final questions, I guess. I feel like there are always a million questions for Toni.
Today are swing strategies, and really these strategies, it doesn't matter what time frame you're trading on. So doesn't matter what market you're trading, doesn't matter what time frame you're trading. So just keep that in mind as you're thinking through these 5 building blocks. So I want to thank you guys over at ISE. I do these webinars for you guys about once a quarter, actually, it ends up being. And I always have a really good crowd and a lot of really interactive attendees. So I really want to appreciate you guys for being here today, and, of course, ISE for inviting me. And, like she said earlier, these are all going to be recorded. So give it a couple of days, and they'll be up on ise.com/archives. So if you have any questions, just head to my website, and you can contact me there. And thanks again, everybody, for coming.
All right. Our thanks again to Toni for sharing your insights today. Thanks to everyone for joining us this afternoon. If you'd like to learn more about the ETFs that Toni discussed today, make sure to visit ise.com/ETF. You'll be able to find more product info, articles, and a link to sign up for those free trade alerts that can help you learn how to best trade those ETFs. They're really great for investors who are new to the product, and they're a valuable free tool. We offer them to all of our webinar attendees. If you have any questions or comments, please make sure to send an email to webinars@ise.com. Thanks again, and we hope to see you all back next time. Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.